Good morning, my friends, and welcome to the Breakfast Club. I'm Darren Hancock. I'm your host today. We are December the 5th today. December the 5th. 20 days left to the glorious commercialized day of Christmas. I hope you've enjoyed our sessions together so far. I've only got a few more left for the rest of this year. Again, I'll be popping in and out here and there for an hour or so in the morning, but usually I will be cutting back on my seasonal stuff. Have family coming out, so I will be on here a lot less. Let's just kind of go through real quick what I see in the charts here setting up. I don't think we're going to take too many trades until 10 o'clock after the news release today, because the news release looks like it's going to kick price around a little bit. I got into a little trade here last night before I went to bed, which kind of panned out. I'll show you that one in a sec. We'll start off over here in the Forex market, but as usual I have to do the check to make sure we're live here, and we are. Hello, bro. Mastered Trading. Oh, excellent. Look at that. I got somebody in right away. Good morning. Good morning. Good morning. Good morning. How are you doing this morning? Mastered Trading. You're new to my group, and welcome. I welcome you. I welcome you. So, or is he gone? I don't think he's gone already. Good morning. Okay, so let's look at the British pound here. We've got all the way up into this breaker right here on the daily. If you're looking at a 3-day breaker, we're inside that one, but we're just looking at this one. So we're deep inside this breaker here, just banging around inside it right now. So I've got nothing really for you on the daily other than perhaps a return into the mean threshold of this up close candle. It was validated just below here. So if we get a return back into the midpoint, I'm going to put a little line there just to kind of confirm, because I really don't have a heck of a lot for this one on the daily for any big runs. That puts you right up in here, so reasonable to expect that we could return to these two up close hourly candles here, or this breaker candle here. We have a last up close candle run, we have a swing point, and then another swing. So this last up close candle is your next breaker, which is around the midpoint of that daily fair value gap we mentioned. I told you I'd stop in on Discord. Daza, right or no? Yes, Daza, it is. You said you'd pop in off Discord. Yes. Welcome, my friend. It's good to see you. Yeah, just doing my little morning review I do before we get into doing some trading. So just bear with me as I kind of go through my day here. So anyway, this breaker here for the rundown below this low is the potential place for resistance. We've got some fair value gaps along the way here on the 1 hour, and if you look for 50% of this range, you're going to be up into here anyway, if we haven't already hit it. Let's have a look at this. 50%, look at that, bang on the money. So we hit 50%, so we got up to the premium level, so it's either 50% or more is classified as a run back to discount, and then we're going to pull away from there down into these relative equal lows. We have lots of relative equal lows all through here. So for me, this is a stronger potential for this to pull back into a lower range today. Again, we'll see what the 10 o'clock news release is going to be. It's always nice seeing ICT charter. Let's go back into this euro. A lot of lines in here. Holy smokes. These are all new week opening gaps. And I obviously haven't written them. So, fair value gap, now inversion. We've gone down through it, come up, found some support at it. I love the way these inversion fair value gaps work. So you literally create a fair value gap right on top of an inversion. What a great place to get in for a long. You're aiming for these old highs up here, and upside objective would be that little fair value gap we had up there. I'm sorry I haven't really been in these charts for a while, because these ones we've been marking out a while ago would have been right on my kill zone right there. That's where I would have been aiming for. And what a great hit. Look at that. Takes it out, comes all the way back into the mean threshold of this order block, runs all the way back, clears those highs out again, and we get right into rejection into this wick here. 50% of that wick, reject off of that below what is now referred to as an inversion fair value gap. We came back up, came down, tagged it, stopped on it, opened on it, and drove all the way through. Finally cleared out the liquidity below this marketplace here, back into this inversion fair value gap. And look at that. Right through, stabbed through, a little poke through, and now we're right back into the middle of it. Lovely, lovely. So, where do I think it's going to go? You're saying, where do I think it's going to go? Well, now that we're inside this inversion, I really don't have anything for you. We might get some resistance off of these this breaker here, because it's the last down close candle swing before a run above an old high right there. So that makes it a breaker. We came back inside it here, so you can attack it from the top, which is mean threshold, and leave. And now you can attack it from the bottom. It's been validated as a breaker from the bottom as well, so you can get at it from the bottom. Well, the bottom, as we say in England, you get it from the bottom, run all the way back into here, look for a body has, oh, there you go, the wick came up today, hit the body, and now we're getting a retrace away. So I'm looking for further, perhaps, if we don't get back into this range here, and this breaker holds, I'd like to see it dig down deeper into this fair value gap below us. CAD, the good old Canadian dollar. Here, look at this, what a great opportunity to get in almost here. We have down close candles, swing point, not a breaker. That is not a breaker. We did not break that high. We came back down, and then this next swing creates the breaker that runs that high. That there is the breaker. This, you could say, is the parent breaker of that run, of that main run up. So as soon as we get a return back to this low, inside a fair value gap, you're looking for further downside. So there's your return to the breaker. Now we have a pull away. This is the 1 minute, by the way. So you could have got short right there, right off that with zero drawdown. You could have got in right there, and you're aiming for this low, looking to get back into these equal highs here, and then eventually run these little imbalances out. This little imbalance right here is still not filled perfectly, and you got these guys down here. So keep your eye on further downside in euro or in CAD, which means there should be strength in the euro and gold and GBP. Remember this one? I remember this was equal highs. It still is. Look at that. We put this one back a few weeks ago. What was this? 1, 2, 3. God, almost a month ago. Has it been that long? And I haven't really talked about this. Been a while, huh? All right. Well, equal highs, relative equal highs on the weekly. They haven't taken those out. So there's an area that we're looking to get some action in. They're going to clear those out before too long. Breaker. Last up close candle before a run, a parent breaker of a run below these lows. Run below this swing point. We swung below here, and we swung below here. So you could say it's the parent breaker of this whole run here, but it's also just the breaker of that run below here. So we're inside the mean threshold of that breaker right now, and we're looking for a return back up into this one here. So does this hold price? We have reprice, rebalance. So ignore that wick. Look for a run back up into here, or this little swing point here as the low. We will also have these guys here. Yes, we've come back and tagged that low there, inside there. One of these PD rays has to give way now. That either we're going to continue down into a logical level of low, or sorry, high here. If we get into the body of that candle, we're looking at that weekly fair value gap. Revisit one more time before returning back up. Yeah. So I'm looking for a return, a little pump back up in here, and then come back down into the drawn liquidity is this high here, I think, with this weekly fair value gap. Australian dollar. Remember I was mentioning about Australian dollar wanting to have a little dip in December, and that's when we have the big run up. This is where, here's the December. See how we've hit December 1st, 4th, 5th. It's working just as it should. So keep this in mind, folks. When you're dealing with Australian dollar and New Zealand dollar, look for the dip down in December, and then the big run up that occurs. That look for the big run. Hydra, how you doing, buddy? I heard I popped into one of your things there, one of your live shows the other day, and you're going for surgery. I hope that went well for you. I really do, buddy. I hope you're doing well, and you've got a lot of great fans there that really love you and really appreciate you. And you know, I will watch some of your analysis, and I love it. I think you're doing a great job, and I hope everything's well. I hope your surgery went well. And what do I think of the 9:30 delivery? Whether I'm bullish or bearish for I'm working my way over there, buddy. I'm just kind of going through all of my things. I'll have my British pound in here, or the USD. Sorry, the USD, the S&D. Thank you. Surgery went well. Excellent, excellent, my friend. Excellent. And you're recovering well. This is coming from a guy who's had 5 spine surgeries. So I can appreciate what it's like to go through a surgery, and the recovery can be quite quite substantial depending on what it is. Sorry, I don't know what the surgery is, and neither is it any of my business, but I do hope and pray that it works. It's worked well for you and you're recovering well as well. Here we go. So Australian dollar. So yeah, like I say, the Australian dollar, New Zealand dollar, this time of year makes a nice little dip down in December and then does a nice little slammer. So these equal highs you see up here in Australian dollar, look for that in the new year. Yeah. Seriously, look for this in the new year. Yeah, it's got to go for the bunch of PD rays, but if I was going to do a long-term prediction for Australian dollar, look up here. Look. So what's a logical area for it to get back into? Look at this consolidation. Okay, this is like we'll consider the original consolidation of the market. We have a breakout, an impulse leg. We came back into the midpoint of that consolidation. So usually what will happen is it'll run above, come back to the top of the consolidation, and then break out and start moving upwards. Or it comes back into 50% of that range. 50%. So if this is your consolidation, so we're just going to see how close I am here. Here's your original consolidation down there. You can either take point to point, or you can take body to body. Uh, 50% of the range. And then, wabamo, off she goes. I do like the wicks. 50% of the range. Look at that. Bang, bang. Hits it nicely, and then we have a departure. All right. New Zealand dollar, same kind of thing. Starting to make its little run back down. I like these equal highs here, guys. I do like these equal highs. For a return to equal highs, inside an order block, propulsion candles, I like that. We also have this inversion fair value gap as a potential place for this to return to. Again, I'm giving you long range stuff. I'm skipping through a lot of PD arrays here. I'm just kind of giving you a feel for where I'd like to see it bottom out before. And you can't really predict the bottoms, but you know, that's where I'm looking for a change to start happening. And we have a big breaker, big ass breaker right there. Last up close candle before run below equal or relative equal lows, any low where there's a swing, and we have a large last up close candle. We make that run down below it. That becomes a breaker. Now you draw that out in time. If we draw that out from here to here, see that can shift anywhere inside there. You want to see this breaker hold price for the next little pump up above. Hello, relative equal highs. Tasty, tasty. Oil, man, did I call oil? What a delicious, slippery substance this is. Let me tell you. So, oil is doing exactly what I was talking about here. This is a market maker buy profile. Then we have a change of direction. We have a low risk sell, accumulation, distribution, accumulation, second level of distribution. We've got another little consolidation here, but it's happening right on top of this guy here. Now, if we take the high to the low, split it, and the original consolidation, you're looking for this price here. So several weeks ago, I call for $70.75 as my low. That's my low, and that's my reason. The same thing I just talked about earlier in the Australian dollar. That original consolidation, 50% of that, look for around $70. Look at this one here, this fair value gap here. Look how much it's back. I haven't looked at this one for a couple of weeks here now, but look at how sensitive that area, that consolidation, or sorry, that fair value gap BISI here. Bang, right on it, rejected off of it, came back, hit it again, and we're back into the bottom of, this is the monthly fair value gap. So now this has now become an inversion. So we've gone all the way through it. We're working inside that monthly fair value gap. My pink ones or red ones are monthlies, gray ones are weeklies, blue ones are dailies. So that's how I can see them when I'm on the, this is an old MT5 account. But one I was quite stuck with for a while, so I'm going to get back into the trading view in a minute. But anyway, there's the oil. I'm still looking for downside. We might come back into this, find some support off the monthly, and then start to dip back down into the midpoint. I'm looking for the midpoint of this and seeing how that reacts off of for price in oil. Natural gas, oh my goodness, I've got tons of cash in this one. I was flying high when it was up here. It turned around. I kept calling this weeks ago. I kept saying, oh, as long as it finds some support on top of this inversion fair value gap, I'm all in, baby. That's good. Then it decided to go down here, and I was like, oh, well, as long as it's a fine support on this inversion fair value gap, I'm going to be good for that too. Okay, it came back. It's coming back great. Now we need to see it blow right through this. Nope, it found support at that and continued back. I'm like, okay, the worst case scenario, these old highs here would give us some support, and it came down, tagged them. I'm like, great. then it continued to rock down, and now we're having Poopville here. Like all gas, like all natural gas. This one stinks right now, but we're still looking for some recovery. I'm in this one long term. I like these equal highs up here. Lots of pockets of fair value. Lots of gaps. So I'm in this long term, like a year to 2 years. Anyway, that's natural gas. Poopers. Big poopers. All right. Now, let me get up into, I'll quickly show you this, and I'll move over to my other one. This is the trade I took last night. It was for $2,600, 26. I took this one really short off of as soon as it ran this bottom out here, I was like, oh, I can get in on that. Got back in, came back to order block, and then proceeded to dive down, and now it's just gone into a little crap. So I had that one running for the 9 o'clock low. There's usually a 9 or 10 o'clock low that occurs during the day for this particular chart, not 9 o'clock New York time. That's why this can be quite confusing. So let me get over to trading view here. I got a trade on here. Oh, I forgot about that one. Okay, I got a $2,000 trade on there. Egads, I'm going to close that one out. I don't even know what's going on. So I just made 20. That just did. How's that for? That looks cocky, hey? Like I knew what I was doing. That one made some money. Okay. Let me see where I went in there. All right. Oh yeah, okay, I got in right here somewhere. Let me just have a look at where I was going. What was I doing? Oh, I got in right here and got out there. Excellent. Okay. Yeah, I'm looking for a run below those lows here. Back to 50% of this range here. So S&P 930. Let's look at S&P 930. Let's look at this one, S&P. Oh, this is NASDAQ. He wanted S&P. I know he's not here anymore. I think he's gone, but let's look for 15 minute. Let's look at the daily here first. So daily, I'm looking for a run below these lows. Yesterday's low, I'm looking for that to take out yesterday's low and start digging into this wick here a bit more. We want to see the run below these lows and get back into this breaker here again. We're just starting to get into it now. So the midpoint of that breaker will put us right in that fair value gap again. So with S&P, I'm looking for further downside. We have validated this candle here. We've come back to, we opened up at the body and now we're dropping down again. So I'm looking for a run down below this low here for the day. So let's look at a 15-minute chart here. So we've got this candle here. Now, that have we broken that low yet? Let's just double check this low. Low is 455.5, and this low here is 55.5. So they're bang on equal lows. So we haven't broken this low yet, so that doesn't make that a breaker yet. That is not a breaker until it breaks that low. So this is just a plain old order block here. This one, however, that's what I wanted to look at. Okay. So we're in this consolidation right now. Equal lows, relative equal lows down in here. Back into this little consolidation. So for the next few minutes, we should look for consolidation. We could break out either side. We could run this low. We could come back up and take these equal highs, relative equal highs out right here and get back up into this range. And you still have this breaker up top here that's still valid inside this larger range that's occurred from 11. I do like this indicator. I don't know why it keeps popping up there. There we go. That looks better. So there's London. We've got to return to Asian low. So that low that occurred in Asia here last night, we had the London high, equal highs. London's high did not take out Asia's high, and we have London low has been swept here. So I'm looking for, this would be a nice little run back up here, take out these equal highs for 10 o'clock, and then continue down into that lower range. That's what I'm kind of looking for perhaps this next minute or so. We'll see what happens here. Hi, Joe. Hope you're feeling well. Oh, see, I like it when people share the love. Nice. Okay, so we're into this order block right here. Midpoint, threshold. Are we going to bang around inside here? What's going to happen at 9 in 60 seconds? 7 seconds. Are we going to run these Asian London high? I want to see that get taken out for 10 o'clock. And then the continuation on the downside. If I was in S&P 500. That's the gap. Look at that. The gap starts here, and look where it ends. Right above the Asia London high. So that's the regular trading hours gap. That would be a nice little fill of that gap by taking out those relative equal highs there. So anyway, that's what I'm looking for 10 o'clock. With that news release, we could quite easily get up there into that range. And let's go to my favorite, Mr. NASDAQ. So NASDAQ, let's look at the hourly on NASDAQ first. So we have the midnight session here. We do have a swing point here. That makes that mitigation. This makes this. Yeah, I guess by definition it takes out a swing low. Would be a breaker. We're inside it here. Inside this fair value gap for further downside. I'm still looking for an opportunity to get down below. So if we can return back into this. What is that? Is that daily? I'm not sure what that is, so we'll have to slowly work our way down and chop it out of there. That's the 4-hour fair value gap we're coming back into, which is the top. If we find support at the top of the daily in fair value gap and then roll over from there, look back to get back to this order block inside the threshold, the mean threshold of that order block on the 4-hour. The 1 hour, I'm going to eliminate that thing because I don't know what it is right now. I'm going to eliminate that guy because I don't know what it is. We'll work our way down. It's probably one of the lower time frame ones. Order block right here, a little tiny guy. See that guy? Upside order block, which is also in alignment with the New York Open. So if we can get back up into here, also into that large up close candle, its body overlaps here, here, and that fair value gap daily. So look for the rest of this to fill and get back in here, and then we're going to run these equal lows. Look for the midpoint of this fair value gap here as well. Sorry, order block. Words just come tumbling out of my mouth without me even thinking about them. I call everything a fair value gap or rejection block, whatever is stuck in my head for the day. I apologize for that. Oh, morning, Lauriston. How you doing, buddy? We're in on. I was in on one of Hydra's live things yesterday. I was kind of looking at some of his stuff, and I like the way he calls the market, man. You know, he calls some good calls, and he had a bit of a surgery, so we were all just kind of hoping and wishing him well, hoping he's recovering quite well. I think I was watching his November 30th live stream. So I hope he's doing well. I don't know if you're still on here, Hydra, but all best wishes are still with you, my friend. I don't even know the guy, but I feel like he's my friend because he's out there putting it out there. He's being as honest as he can, and he's putting it out there and trying to teach a little bit along the way. And, you know, that's what we're trying to do, right? We're raw right here in front of you. We're ready to make mistakes. And I appreciate him wanting to be as perfect as he can to give you the best entry, the best possibility. He's got great loyal people that follow him, and I think that's awesome. But I have to admit, I got a couple of really good guys on here too. I'm just saying, like Lauriston, my buddy. He's rocking it. Yeah, live stream's kind of the way to go. And I don't mind sharing my stuff. I really don't, because you're the one that pulls the trigger. I am not here to give you any financial advice. I'm just here sharing the stuff that I know and how I read the market, and it's going to be different from everybody else's. And if you don't like it, just move on to something else. Move on to someone that you do like. You know, they don't have to say nasty things. Just move on to someone that you like and stick with them. You know, if they teach you something, you learn something, or it blends with your kind of trading style, then by all means, go for it, man. That's awesome. Okay, so we're looking for those highs there. So 15-minute, 1 hour is right here. Let's look at 15-minute now. A little different from, do you see how the difference is in, this is the S&P. Look at those relative equal highs that are on right there. Asia and London sessions line up. Look at the Asia-London session here. There's an SMT divergence between the sessions. Look at this. Now we're running up in there. Now I bet you this guy's coming up in there as well. Did it go up in there? How far up did it go? Did it take out the highs? I don't know what it took out the highs. Let me get back to the one I like. Oops. What's going on? There we go. We'll run the London session. Asia's high. Are we going to take out Asia's high? I do like this little fair value gap here. We just ran these equal highs out here. Here. You're killer, Lori. Don't you worry, buddy. You're one of my original guys that came in here at the beginning. And bless you for sticking around. You have to put up with all my flippity flopping. Small streams can remind me of Brian Watt and ICT. It's a different vibe. Hey, I'll be here a lot, brother. Hey, good. Good. Well, you're welcome to pop in anytime you like, my friend. How long will you be doing? How long have you been doing this now? Well, I think according to the top there, I have 84 videos I've done. I think I started in August. I think Kevin, a security guard buddy of mine down in New Jersey. Do you remember Kevin, Lori? The poor guy's been working tons and tons of overtime lately, so he's he hasn't been able to get on. He's been working, like, he was working 12 days, hadn't been able to get onto the channel. He had literally, within 2 months, he just nibbled like a piece of cheese. He was just nibbling his way through the charts, and within 2 months, he got a funded account. 2 months, and he's only been doing ICT stuff for 2 months, and he just followed the ICT silver bullet setup. That's all he did. He didn't have any deep insights into ICT stuff. He just followed that one pattern every day, and as soon as he made 10 pips, he was out, and he got a funded account. So, can it be done? Yes, my friends, it certainly can. And yesterday, I managed to pass one of my funded account challenges. I got one more to get that fully funded, and I'm about $600 away from the other funded account. So everything's tickety-boo for me. And Lauriston, my buddy Laurie, he managed to get himself a funded account, and he's kicking butt. He's kicking butt, my friends. And sometimes you can just make one little thing, lose the account, then he's right back in it, starting again. So, success. All you do is what we teach in NLP. look it up. If you understand what NLP, it's all about behavior modification and stuff. How you repeat successes. Find the strategy that works and repeat it. Find the strategies of the masters, repeat what they do, and you'll get the same results. It's that simple. It really is. But the tricky part is finding the strategy. And the strategy, my friends, has been found. ICT has shown us. He has led us the way to the promised land, my friends. Anyway, I'm babbling away here. We've run these equal highs up. Now we're back into this range consolidation. 10 o'clock, we're waiting for the news. They're all waiting for the news here. They've just quickly cleaned out that liquidity. Why, perhaps, have they cleaned out the liquidity above the market before the news release? Are we going to have one more little slam up in here to take out the Asian boys all the way down before we come down into this lower stuff? I'm still looking for that daily fair value gap low, my friends. Look at that. There's 50%. We did not hit 50% yesterday, which is also this order block at the top here. So we've come all the way back to the top of that. It's not a breaker though, because there's nothing broken here. It just came down, came back up again. Here's where the breaker is. We have this run down below this low right here. So if we're inside this 2-day breaker, then we're looking for a fulfill midpoint, fulfill of this fair value gap, BISI. So we've come back from this order block. We ran down, validated it, came back up, opened on it, and then proceeded to come back down. So I don't want to see, I'll tell you what I don't want to see. I don't want to see it come back and revisit this wick. If it does, no more than 50% of that wick. Ideally, 25% of that wick. If I can get 25% of that wick and then it'll just degrade from there, fine. But otherwise, I want to see that we may just see it run up to here, 25% of that, and then, because that'll show weakness. And then, this is my problem here, guys. I tend to want to marry the trade. I want the idea to go through instead of going, well, here's what the possibilities are. So 25% of this, run back down into this, take out yesterday's low. 50% of that consolidation looks good. Break the consolidation up into quarters, and you'll see 75, 50, 25, and the fulfill. So look in there for today for the run. I'd like to ideally see it get back down into here, midpoint of the breaker. So that's my hopes and dreams. If hopes and dreams were wishes and nuts, it'd be Christmas every day, as my friend says. Top of the fair value gap. Order block. Do we find support here, or we eat through this and go to the midpoint of that candle there? Again, is it a breaker? Technically, it ran a low, it ran a swing point. So does the threshold of this candle here hold price, or are we going to move back into a deeper part of a premium of this range? And we do have this breaker sitting right here. Last down close candle before a run above an old high. That candle there is your breaker. You take the wick and the body and you draw it all the way out like so, and we say breaker. Let's just make it a plain old breaker. So it says breaker. See how we broke through it, came back into it, ding, body's respecting the bottom, and then we start to run back down into midpoint threshold of this order block. That gets validated right there. We turn around to the midpoint, hover around the midpoint here, and now we're back up once again into this candle here. There's the threshold, just hit the threshold. Do we continue through it, looking for this range premium area run back into that breaker? Because if we pull the fib tool from top to bottom, and I know this is I'm a Mr. Fib guy. I do like the fib tool. So we'll pull this first one here. Always look for the highest swings, the swing points. There's your 50%. Look at that. Whoa, look, it seems to line up with some things that we see here. Oh, look at this. Is this sexier? Oh, no, it doesn't. It lines up with the bottom of this. There we go. There's 50% of that little range. So let's put it all the way up to this range here. Let's see if that brings us to our breaker. Look at that. For 50% of that range that was created from there to there. And well, look at this. Is it algorithmic? Is it true, you say? Is this these two big or actually no, I was going to say, look, is those candles would make that big ass 2-hour, 3-hour breaker, but you can't. You're supposed to add them together if they're long enough to take an old low out, like a parent breaker. But anyway, my point is, top to bottom, 50%. Does price come back to a 50%? Look at that, right on the beezer, and then we pull away. Right on the beezer. So if we're going to take out that one more time, get back into the bodies of these candles, which is also that midpoint of the breaker, also the line we put in here for that wick. Now if I pull this tool and I go like this and I go, let's turn that into a retracement. 62% retracement is inside this order block. Now typically when you pull a midpoint of a breaker, we like to pull the body. We don't really pull the wick to wick, but you can. I know I won't give any more information out, but because I don't know, I can't remember or not if Michael shared this with people. So anyway, I'm just going to give you this. That body will typically, you can take the midpoint of the body of the breaker, but you can, for poops and giggles, we'll say it's from wick high to wick low. That's considered the breaker anyway. That lines up with our midpoint that we're looking at on the daily. Remove. What's people saying over here? I'm good, bro. Hope you're doing well. Hope you're good as well. Yes, I'm good. Small streams can remind me that Brian what? Okay, thanks, bro. I'll try my best. How long have you been doing this for? But answer that. Yes, I remember him. Hope gets the time to trade and break free from having to work so much. Yeah, I agree, man. That guy, Rizwan, buddy. That's my buddy from Rizwan from Pakistan. Friend of Lori's. So, hola, Rizwan. Rizzy. He's a buddy of Lori's. So, welcome, Rizwan. And we've got other people here. Look at that. We've got 9 watchers today. Woohoo! I've almost hit oh, he left. We've almost got double digits. One day we'll hit double digits on our people popping in. All right. Where are we at? We're at 11 minutes away from the golden hour, my friends. Into this, we're still in the midpoint of this order block. Yeah, technically, breaker. Not a great strong breaker, but you know what I mean. Where's the 10 o'clock news going to take us? Let's look for daily, weekly. Let's go to daily here. All right. That's a 1 minute. I wonder it didn't look right. Dow Jones. Oh, we never did finish off all of our little analyses for the day. Let's look at Dixie. What's Dixie up to today? I was looking at this price leg that did not take out that high. It did take out these relative equal highs here. That price leg run up as a projection down for a 4-banger. We're looking at down here. Right now we've come back into this breaker here. See that? 2 up close candles. That up close candle is the higher one of those two. So that's the one you take for the run down below these lows. Breaker, breaker, breaker. Draw that out in time, and you will see how great breakers are. Look at that. Came down, tagged it perfectly, and we left. So, is that spontaneous? Is that a randomness? I think not, my friends. I think not. That is a beautiful example of return to the breaker. Clear out old lows. Look at those equal lows down there. Inside of a breaker. And then pull back into the range. Lovely. Loverly. So, swing point. Pull your fib tool. You're at 62%, at least 62%. I like back to this daily fair value gap inversion. If we find some support off of that, look for it to come back down. We need it to get through this daily inversion fair value gap on the downside if you want this continuation as the next price leg down. If price is going to poop the bed with the American dollar for the next month or so, I want to see this. If we do get that run down again, I want to see it find some support inside this inversion. If we don't, again, I'm just saying if we don't, because I'm never going to give you an absolute top or bottom. If we do break this high, then we'd like to see this provide some support to get back into this SIBI, sell side imbalance, buy side inefficiency. So in order to get back into this SIBI and back into this breaker up here, last up close candle before a run below an old low, in order to get back up in here, and you could add these together and say that's a 1, 2, 3, that's a 4-day breaker that ran lows. First of all, look for the low, for it to come back into the low. So if we break this high, break that threshold of this order block, look for that low to find some resistance, or the body of this candle to find some resistance. And if we get some resistance, which is also around the 50% of this SIBI, you take your fib tool, pull it down to the bottom, drag it out, divide it into quarters, and watch for the quarters to provide a level of sensitivity. That's if we get up there. Right now we're looking at these inversion fair value gaps to see whether or not they provide enough support for us to continue back on the downside, or if they give us a ladder effect, like that rock climbing effect Michael likes to talk about, to get us some support to get back up into a deeper part of a premium of this bigger range from here to here. If you pull your fib tool from top to bottom, I still got another 6 minutes before we go. Look at that. There's 50% right on top of that daily fair value gap. So if we do push through this, look for that daily fair value gap inversion high to provide some support off the 50. We should get a reaction off of that. At least bounce around inside that inversion fair value gap a bit before it either runs up or hits that big wick off, reject, and then come back down again. Anyway, there's a couple of scenarios for you in terms of what I'd like to see the next day or so. Is this wick just coming up to tag this today and we're coming back down? Or are we finding support here? We'll bang around inside here like a pinball, or drive up. 5 minutes, look at that. It's running for something Now, usually when it runs highs out before a news event, not usually a good sign. That's usually a run in liquidity before they dive back down. Just saying. Just saying. Okay, let me get this out of here. That was a projection. I'm going to put that little note here as a price point, price label down here as a possibility for downside, just in case I don't go back to that for a while. Oops. Stand by. I want to get out of there. Remove that. 10! We hit 10 viewers. Oh, now a 9. Man, we hit 10. I saw 10 on there. We hit double digits. 10 people. Okay. Let's get back into the... So we're through the midpoint of this candle. That's where my objective is for breaker-wise. That breaker, I want to see that breaker provide a level of support. What did our ES end up doing? Okay. So it is making its little march up. What we were looking for. It did not take out the lows. Excellent. It's continuing up as we described, and I think it's rounding for these Asian London highs here. That's invariably where I think price is going to go. Rizwan, hey guys. Hola Rizzy. Make sure you share the streams, guys. Get more people in here. Darren has the best streams in terms of reading PDRAs. Oh, Rizzy, I'd like to give you a big hug right now, buddy. I'd like to give you a big old hug. What a nice thing to say. What a nice thing to say. Oh, I feel so warm inside and fuzzy. Thanks, buddy. I gotta admit, Hydra, he's a brave soul, but he's a handsome kid. Me, I could come down here in the morning. In Canada, it's 7:58 in the morning, 2 minutes before New York Open, and I'm usually up around 6 o'clock in the morning, so I got bedhead going on. I got that whole firefighter rolled over and we respond to a call. It's a good thing we have to wear a helmet when we get called, because we got some serious bedhead. When we get called late at night, if you're in bed and you get a call, we get that serious bedhead thing going. So then you come back and you turn bedhead into helmet head to go back to bed. It's an ugly combination. And this morning, I don't have a video feed. I don't show you my face. Not that I don't want to show you my face. It's just that I don't want to show you my mug in the morning. I got my cup of coffee, my bedhead going, my pajamas on. We're in here in the trenches with you boys and ladies, working it out. So Rizwan looks good, or Hydra looks good. It's a young fella. He probably rolls over in the morning. His super tight skin, looking all young and dapper. Sorry, you don't get that with me. If I ever do an afternoon session, if I come back for an afternoon session, I'll probably see if I can. I'll do a video feed one day. Anyway, we're in this whole consolidation. We're just sitting here waiting for the news release. Let's look at the 1 minute. Let's get some fun activity here. Let's watch this baby light up. Oh, let's do all three. Let's go to all three here and do a... Okay, so Dow's run the high. Oh, these guys will run their high. Here we go. Here we go. Face reveal, yes. Trust me, man. You know, you see my picture up on my thing there? That's me from back in my firefighting days, when things were good before surgeries. Here we go. All right. So we've run that high. Look for this breaker now to give us some support. Or we can get a fill. It's perfectly okay to fill this fair value gap here off this order block. One minute. Look at all this stepping we've got going on here. We have this little Judas kind of swing into the London here. We have this, oh no, into New York Open. Order block, key off order block. Mid threshold of these order blocks. Order block. Come back into this guy right here. Look at that mean threshold, lovely. Come back in, find support at this. So we're getting that slow grind, steady support up. That's the point we're looking at on, I think, the daily. Now we're looking for that fill of that fair value gap. Let's go to the 5 minute here. Up here. We'll see with the bodies of the candles if they respect that midpoint of the breaker. Remember, wicks can do the damage. You'll see where the bodies end up. At least we got the right direction so far. So, 11 people. Who else have we got in here? Pop in, say hi. It's okay to say hi. Nobody bites here. There's no ego here. We're here to have a good time. All right, here's our fair value gap. We'll just hit the edge of it. That little filler right there. Was it 15 minutes we were looking at that one? Yes. So we're into the 15-minute one. Mitigation block. Last down close candle that does not break an old high is mitigation. So that's a mitigation block. Sorry, let me make that a little bigger because you guys are probably squinting at the screen. Mitigation does not break an old high. So there's your high, old high. So I'm looking at breaker or mitigation. Remember breaker inside of a fair value gap? What did that mean? What did that mean? Do you guys remember that one? Tesla, buddy, you're back. I always call him Tesla. This is hard to pronounce. Tesla. I want to respect your names. I don't want to make fun of your names, so please don't think I am. If I can't pronounce your name, with much love and respect, you'll get a nickname from me. Greg. Greg was your name, correct? Now, do you prefer Greg or Tesla? I'm going to call you Tesla, even though I think your name, you called yourself Greg yesterday. Look at that. Right back to this old low here. So do we get a reaction off of that? I like it. Inside the fair value gap. Breaker inside the fair value gap. Oh, this is all looking sexy. If we come back and nail that breaker, not that I'm predicting the high, boys and girls. Not that I'm predicting the high, but what a great place to turn around and start a nice little decisive run back down. Now we've cleaned out the Asia and London and yesterday's PM session high. We're looking at that line. I put the 50% line on the daily. Remember I said I didn't want to see it get above that. That's that 50% line. Inside a breaker, we have lots of confluences that really support whether or not price is going to be held in this area. So confluences, for those who don't know, are multiple. If you've got an eye on a higher time frame objective, and you find on the lower time frames and higher time frames tend to have objectives that overlap that point, so you have 1, 2, 3. The more confluences you have that overlap a certain area, the stronger the likelihood that that particular area will hold. Now watch this prove me wrong and end up running blowing right through this breaker and just charging up into higher time frame stuff. All right, so we're at 8:08. So let's look at the looking for our silver bullet setup here, ladies and gentlemen. Silver bullet setup. Now, if that was the high of the day, AM session, let's look for a fair value gap to form on the 30-second. Ooh, right there. That's your 10:05 potential silver bullet entry right there. If that's the swing point, the run back up into here gets you a silver bullet entry low. Stop loss goes above. If you're wrong, keep it tight. So you cut your losses short, keep your losses. So look at how much you want to risk. And I'm going to put my money where my mouth is here. And I'm not a big fan of these early silver bullet entries. Right there. That's the silver bullet entry on the 30-second. So Michael says look for the 30-second or 1 minute, look for your setup, and there it is right there. I didn't put my money where my mouth was, sorry, I apologize. Stop loss would go up here. I don't like the early setups until I see a really good confirmation that we've got a downside objective. Even though we did have confluences for the upper stuff, like Hydra, I want to give you guys a really, really solid entry, and that is a 30-second entry right there. If you follow the rule of at 10 o'clock, the first down SIBI that you have, the return into it is your silver bullet entry. Look for 10 handles, minimum 10 handles. There's a fair value gap fill down here. The fact that it's going all sideways like this, I hate that. So I'll wait for the 12. Tip your hat, run below here. So this BISI is a fair value gap, right? We're between this guy and this guy. We're banging around in between those two right now. And we're at, right off that 50% mark that we're looking at on the daily. That's that line I said I don't want to see it really get above that. And yeah, this is a wick on that daily candle, which is nothing for that. So I want to see it come back into here and see how it's banging off of that 50% mark. Good, those are good things, but if it does one more little pump up in there and finish that fair value gap off that we were talked about on the 15-minute, that is the potential as well. So I like to wait, not for this one, but for the 10-12, because usually I look at the reason for to do that is because I look for the wick forming in the first. If I was going to say that's an hour-long candle, I want the wick to happen in the first minute and the body to start really rifling through this. So at 12, I look for the 12 candle. So I want to see this blow through here with a big bold candle down now, or in the next few minutes. Big bold candle down. There we go. That's it. Yes, yes. Oh, do what I say. Do what I say, mistress. Yes. So big bull candle down. Good. Now I want to see a return back into this cluster right here, and then we're going to get a short on there. But there's your silver bullet. If you did take it, I'm happy for you. I'm so happy for you. I like shorts as well. Yeah, I'm short on ES. It's weaker. Let me get back. I got all my accounts. I have to line them up here for these. There you go. And there's your short. So. Oops. Run up in here one more time, or come up into that fair value gap. This is the hammer. I don't mind being wrong. Stop loss has to go up here. Actually, we'll have to put it up on top of that now. Because we could get that upside fair value gap. I want to see that. Okay, so we came back into the original 30-second one here. All right. Let me move that over a little bit. Now I don't want to see it revisit the top of this. So we're going to move that to there. Yeah, I want to see a big bold candle take off from here now. I've got the 12. Consolidation. I don't like the fact that it ran through that consolidation, but it did get back to 2-minute consolidation. Now you don't want to trail your stop loss too soon. So if that's the fair value gap there. Oh, I got a phone call. Stand by. You hit a deer. Is it dead? Oh no. So it's wounded? Oh, you're really good at seeing deer. What do you mean you? Right. You're okay though. Oh yeah. Wow. So is the car totaled or what? Did it come up on the windshield? Are you pulled off the side of the road? Do you need me to come get you? Okay. Yep. And don't take anything off the car. Unfortunately, insurance wants to see the body parts on the car. This for, yeah. Oh, sorry, man. Sorry to hear that. As long as you're all right. There's somebody putting it down? I know, I know. Jeepers. Okay. You got a fish die at school, now you've got a deer. Oh my goodness. I got, as long as you're okay. Hmm. Okay. Okay, bye-bye. Jesus. Well, how's that for a bit of adventure today? My wife hit a deer. She clipped a deer. Yeah, we're through we're through this, so chances are I'm going to get taken out here. Right off that order block. Yeah. Rejection. See, now we're on top of this consolidation, and we're on top of that. So that would probably be best to close that out. Yep. Bad position. Now that I've closed it out, now you guys can see it turn around on me. This is usually what happens. I close something out, then it comes hammering back down and gives you what you need. That's all we've got left to hold us is that rejection block, and it's hit it. So now you've got this order block here. There's the bottom of it. There's the open threshold. Yeah, it's through. Now I want to see if this, back to that fair value gap on the 15-minute, does that still hold price? We still have one prop firm account still holding on to that price. So they ran that high out. That was looking for, what is that, 15-minute? Look at that, right back to that body. Right off the body there. We've had a nice little pullback down, so now that would have been an opportunity to get out of that trade and sit on the sidelines and wait for a better setup. And let me check my prop firm. I think I'm still in this trade. Yeah, I'm $200 down on that one still. So we're waiting for this. Now we've got this valid order block. I want that to hold now. Yes, NQ. Whew, okay, now I'm finally in the red. Look at that. Ran right up to that order block, and now she's coming back down to where we want her to. Now I'm up some money, finally. Okay, let me, you're looking at this SMT divergence here. Where are we at here? Day. Let's go down to hourly on each. Let's see what they're doing. Okay, so we have E-mini, S&P made equal highs. These guys, NASDAQ ran out its high, and Dow failed to make a higher high. So Dow is the weaker one out of the bunch, obviously. It's taken out its lows. S&P hasn't taken out its lows yet. We have relative equal lows, and NASDAQ hasn't taken out its lows either. It's come back right into that order block here on the 1 hour candle. It's tagged that, reacted off of that breaker right there. These guys just ran into the fair value gap. I think they are just over. What's the high on this candle here? The high is 79.75, 79.75. There is the equal highs. And oh, Lauriston, I think I just passed my funding challenge. I'm going to close that right there. Oh no, I can't now. It just popped it. I'm literally a few dollars away from passing my challenge here. That Top Step account I got back in for the Veterans Day. Oh, I just noticed that, and it's coming all the way back now. I just popped over the $3,000 mark, and now I'm back below it again because it's on a little run back up. Let me stay focused on this. I want to pass this prop firm account here, so let me just get back over here. So I'm looking for a return to here and a continuation down. Well, we called it. We just wasn't expecting this big, well, we were. We said that fair value gap above the 15-minute. I originally had it up here. That's what happens, guys, when you move your stop loss like way too fast. You get stopped out. And you second guess yourself. So we're back into this body here. Breaker inside of fair value gap. This should be a short from here. Get in this one more time for a short. Off that breaker there, right there. Last down close candle for a run up. Come up inside here. Stop loss should go right above here, and that'll be my last trade of the day if I'm wrong. I didn't get no congratulations yet, Lauriston. I'm still, it's come all the way back up and gobbled up all my profits, and I'm just a little bit profitable right now. But I was like literally over it and past it, and then it rolled back on me. I didn't hit my get out of as quick as I can, so now I'm back to $40. I had $600 there, now I'm back to $4. We can come all the way back up to that line again. But I want to see this breaker hold. You could say this is these guys are sitting inside this big monster right here. So you could move it all the way up inside here to that big guy there, which would be a revisit of this. 50% of that fair value gap right now. Swing point. So this is where you get to watch your paint dry for a bit. You're shorting Dow, 15-point stop. Nice. You shorted off this order block here on the hourly. That little run up, that's the candle you want with those two. Eat them up, bottom. You've already run back into this. Now you want to see it just start eating through into the threshold of this candle here, or at least get back down into that little guy down here. It's a lower body candle, and it is the high or the open of that candle. Let's look at another tick again. Threshold. If we run that threshold, I'm out. That's the higher body candle. Swing, swing. Yeah, if we lose that, I'm totally wrong again, and I'm out for the day on my demo account, and I'm underwater in my other account now. There is a 30-second one here, order block. We're into that one. You're going to get through this consolidation to the other side though. This is valid. Order block. Fair value gap. I want to see it eat through this. Come back, find some support at this. Let's make this a breaker. Run through the bottom of it. Thank you. Come on, push through now. Body. Push through. Thank you. There you go. So now we want to see that one get right through the bottom of it. We're going to get through that swing point. Come back, find this some support at this fair value gap here. I don't want this to be just one of those wicks that do the damage. So we're back inside that inversion fair value gap now. A little imbalance in here off that. No, then you're looking at this guy here. That's going to take me out. Watch that threshold there. Well, we're getting beat up here today. I got that 30-second one off there. Threshold. That threshold gonna hold. Order block. Yeah, this wick did the damage. We're really in between this candle here and this one here now. Rejection block. Man, was I so close to taking it out. I was so close to closing it out right there. Yeah, I'm out of that. Boy, is it ever choppy. Needs to treat. Clean cover event needs to treat as resistance. Volume imbalance. Let's get into that 1 minute. Back to a 15-minute here. Let's see what's going on. So we still got this fill here. I was literally at past my funded account and then turned around and came back on me, took up all my profits, and then took $500 out of my account. So now I'm even further away from funding again. Oh well. Let's get back to our original idea. So there's our inside that breaker. So we're looking for this fair value gap to fill. There's a little tiny one above that as well, making an inversion fair value gap. We have a little breaker here. So there's the top. That's the fill. Let's see how it reacts off the top of this now. We're inside this breaker here now. That's the fill. Now, we got relative equal highs up here. If we lose that last candle right here, then it's running for highs. London, take out London's high from yesterday. There's a little regular trading hours gap here yesterday. Will bring us all the way back up into that little gap we've got over here. We're right on the bottom of that last up close candle. That being your 15-minute breaker right there. We're getting a nice reaction off of that. Wicks do the damage. Bodies are still inside that breaker on the lower, higher time frames. Volume imbalance at 1626. Yeah, I think that was the one I was looking at up here. And that will bring you right to the top of your regular trading hours gap that we had yesterday. So if we do come back to fill that gap in, my eye goes towards the same place you were looking at there, Tesla. That imbalance right here. So now if we get on top of this breaker, get some support on top of these fair value gaps, look for further upside run up here and change our whole narrative around. So I can't predict the highs, right? Mind you, I like that's a solid piece right there. It's a nice solid breaker. We'll see if that holds. If it doesn't, then my eye goes up here. Fill that. Look for that. Lori, how'd you do on yours? You went short on ES, did you not? Did you say you were going short on ES? ES, NQ, SMT, what do you think? Sorry, 1 minute charts. Congrats. Yeah, don't congratulate me now. I'm actually less down. 15 points. You're short on Dow. How did your short on Dow go? On the 1 minute. Let's have a look at that. Eek. That's... Ladies and gentlemen, this is what the inside of a meat shredder looks like. Or a cheese grater. Yes. See how it's compressing? Compress, compress, compress. So this is how you look at those pendant patterns. See the pendants closing in? That's the compressing or coiling spring. As Michael describes them as a coiling spring. So you go from PD array to PD array. So you went from premium, discount, premium, back into a discount here. Like if you take fib tools, you'll see how this works. Take from here to here. There's your 50%. So you're 62. Let me just change this one around here. You get to see what it looks like. Reverse it. High to low, 62% retracement. Oh, sorry. No, I was going the other way. Yeesh. Come on, Darren. Sorry, let me change this around. Reverse. Okay. There's your 50%. So we went from, that's your range, discount, premium, and then from here to here is the internal range liquidity. 50%. You pop over that, get yourself a little discount damage, and then you start to run up into premium again. Then you run down from here. There's your new internal range liquidity. From there, look at that deep discount, 79% retracement. Then you can pull that one back from here, from that range low to that range high right there. 79% retracement right into that order block. So you see how it's compressing P to A to P to A, premium to discount, discount, premium, discount, premium, inside that range, discount, premium. So it just keeps repeating itself till it can unwinds, till it's forced to unwind and either fire off going up or fire off going down as soon as it extends past this range. And there's a breakout. Still inside this bigger range. Coiling spring. Now, do we run these highs? So I hope he got stopped out. Yeah, we got hammered today. Got stopped out. Be right back. All right, let's go back to this. We're back up into this order block again. I like that possibility of this imbalance up here with this gap being filled. So we can let go of that guy. Breaker's not holding. Remove. Look for these to provide support now for further upside. See, here's your consolidation. Impulse leg. Open. Come back to consolidation. Perfect return to consolidation. Leave town. It's easy to see after the fact now. See, when you marry the idea that you want to go down, all you try to look for is reasons to go down. You got to have the flexibility, and I still get caught on it. Obviously, you just saw 2 big hits today. You can see that very clearly now. Consolidate, impulse leg, wait for the return for further upside prices. Like Michael would have just, I could hear him screaming, "What are you doing?" It's so obvious that that is where it's headed. And what am I? 1, 2, 3, 4, 5, 6, 5 15-minute candles late to the party. Hello. Here's another one. So we have a breaker that finally ran all the way out here and took these guys out. So we have New York PM session, impulse leg, came back out inside of that breaker. Look at that. Right inside that candle. If you draw that one all the way out to here, we ran above it, came back. 45 minutes ago, Darren, you missed this guy here as well. Here for further run up, through here and here. Now we were calling it to come up there, but we didn't take the opportunity to say, well, if you're calling it to get up there, then take the damn trades to go up there. I was just looking at, if it comes up here, then I can get short and head back down for these equal lows instead of just enjoying the run up and trying to catch. That's why we're trying to catch the high, and we got hammered trying to catch that reversal, trying to catch the reversal instead of just going with the majority of the market order flow. So something to journal, a journal entry today on, instead of trying to catch the reversal, stick with the order flow of the day. We knew it was going to come up here. We drew the line on the daily, saying we didn't want it to go past that point. So if we knew it was coming up there to get short, then we should have been capitalizing on this consolidation return to. That's a classic consolidation return to. Like, man, oh man, that's 15, 8, 16. You're over 100 and some odd handles here, 150 handles. 150 handles we gave up there. I'll call out my pronouns we, because me and my multiple personalities made our mistakes here. Yeah, we're looking at that as the breaker. It is still supplying, still supporting price. If we've got to lose that candle though, start looking up here. All right. So far still holding price. 15 minute, 5 minute. So if that is not the high, if we continue to the upside, if we get a return to old high here and continue further upside, we'll get back into 50% of that range or 25% of that range right here. If we're really strong still. I don't know how I could have missed that. Beautiful consolidation. Impulse leg, come back down. Right on the money. How on earth did I miss that? Because my psychology was married to taking this out and waiting for the impulse. Or the return, the reversal. Okay. Stay positive, positive, positive in your head. Classic. Beautiful classic run up. I can see how Hydra says, I want to be perfect for you guys. I want to be perfect for you guys too. And that would have been perfect right there. Hindsight. It's always so beautiful. It's always so 2020. Oh, that is so 2023, man. Off grid. Mr. Derek is not around. Mr. Derek is out golfing. You're stuck with Mr. Darren here. Okay, so I'm going to draw that 15-minute imbalance across the top here, just to okay, there's our imbalance. Do I have a template for an imbalance? Let's make one. Make a imbalance. We're going to put some text in there and call this a 15-minute price imbalance, or volume imbalance. Some people call it a VI. And we will make a template and save it as 15 a minute price imbalance. Oh, we want that to be right-sided. We want the style. We don't want that to extend to the right. We're going to save it as 15-minute price imbalance. Save it. Okay. Yes. Done. Okay. Something to look forward to. Meet up there. And we've got this guy right here. this guy is the breaker. Sorry, text, right. Okay. That's the breaker we're inside right now. So we'll see if this kind of holds price, or are we heading for this guy up here. And what are we at here? 11 o'clock AM session. So, do they want to run that out for lunch? All those equal highs happening on the midpoint of that breaker, the threshold of the breaker. Hey Darren, I have a question. I'm quite profitable, but I'm pretty unorganized. How do I fix that? Unorganized in charting journal, please enlighten me. How do you fix being unorganized? Are you unorganized in your head, or are you unorganized on your charts? Or unorganized in charting. Okay, so a young fellow we had in here, he was an engineer. His name was Joseph. Joseph, when I was originally trading, I trade on this MT5 normally, and I have only recently come over to TradingView. Now, I don't promote TradingView in any way because I don't have, I don't make anything off of them. Not that I want to, but I'm used to being in this chart, so I was always constantly moving it back and forth, going up and down, and you had to come up and, you know, shrink the thing down, and then you got to move it over, and then you got to play with this other thing over here. It was really frustrating to try and get trades and get organized here, and then you try to put these lines in, making sure you find your right spots, and I couldn't just right click and drop. Like if I was going to put a fib tool in here, I couldn't. I'd have to keep playing with the numbers, so it became very tedious and unorganized. And then Joseph came along with this TradingView, and you can organize things, and there's just a couple of indicators, and they're ICT type setup indicators that set up these ranges, like the Asian range, London range. And that's a free indicator on TradingView, and it's called One Session, One Setup for Life trade. So that kind of organizes your charts into Asian range, high or low, London high and low. It also gives you the New York Open and previous days highs and lows. You can adjust. There's many different things you can adjust in there. Kind of give you a feel for where the charts line up visually, so you can say, oh, we just ran out a previous day's, like lunch's high and New York's high. We just ran that out at a time that I expect for price to reverse. Then you can say, well, that's a logical place. You can see it visually, and it cleans up the charts a little more for me. I'm a very visual kind of guy. That breaker looks like it's holding, which is kind of nice. I want to see it get through here now and come back up, find some support here. We want to see this start getting into, what have we got on a 1 minute chart that supports this as a downsize. That's a lot of, I'm going to revisit that in lunchtime kind of look to it. So now we're breaking this low. It's good. This big down candle for a run up. So you can get organized that way by organizing your charts better. Pay for data, pay for the TradingView. It's a way better setup. My buddy was on this TradingView years ago, and I was resistant to change over to it, but I managed to change over to it now. It makes a lot of sense. I was building bots, a lot of bots on MT5, and you couldn't build them on, I don't know, Pinterest or PineScript or whatever it is you have to use in order to build something here. So, and I don't know anybody who builds bots on PineScript. So I was committed to staying on MT5, and now I'm kind of drifting away from MT5 because I'm enjoying this TradingView. So you can get better organized on TradingView when you take your charts, and then I can quite easily show you off grid how you can set up things, like if you set up your, like a fib tool, I can just right click, create templates. I've got an equilibrium fib tool, quarters, I train swing projections, TGIF Fridays, so they'll all adjust different fibs, and I don't have to just kind of keep playing with the numbers. They're already set for me, so I can make templates that way, way more organized, and it gets you quicker, right? Look at this run in now. Son of a bitch. We got in way too early. That was the breaker high. Look at that, right on the threshold. Stayed there, broke down. Now, if we get a return inside this may be another run for a down. We're inside we're eating through this guy here and this guy here. So if we get a return up into this candle's low, I'm not taking any more trades today, but because I said I wasn't going to take more. So look for mean threshold of this candle, that candle right there, returning to that. Then you're really stuck between this candle here and these candles here for the breaker overlap. If you break through this guy here, you come back up, break through him, come down, or you blow through him right now, then come back up and into them. Like, it's good. So then you look at this guy down here as a parent breaker for that run above an old high. And journal. When you journal, There we go. We're finally blowing through that. Good. So now you've got this guy down here. We didn't get a chance to get on there now. Oh, what a shame. All those trades that we were in would have been just killing it now. Ah, no reason to lament. You shorted ES. So we're inside this fair value gap here. And in terms of journal entry, go to Notion. Off grid, you can go to Notion and you can create there's an inner circle workshop or workspace journal entry stuff you can grab there, and you can use that to do journal entering. You can find missed charts on it. You can go back, analyze your chart, screen capture, load it in there as this is what I missed. So for my journal entry today, it'll be that consolidation, run back to consolidation, and then head up for higher prices. That would have been, that's the one I'm going to journal today about. And the psychology was waiting for my reversal, waiting for this thing to happen. I was picking the highs and got beat out by that breaker right there. So had I picked this, all it would have done is reinforced a bad or negative behavior, which was trying to predict the high. So I was trying to predict the high here, trying to get in off that fair value gap, but silver bullet entry, and then it traded back against me here, and then tried to get in another one, and I missed this to get out at 50% of the range or return to an old high here. Missed that one and just traded, let it take me all the way back through here, taking out these highs again. So there was lots of opportunities for me to get out with profit or to see an opportunity. So the psychology was wrong. I was well married in my brain to this, what's happening now. And so I got this right. I just started chasing it instead of waiting for that opportunity to wait for a break in market structure for reversal. Mind you, seeing that here now, if I would have seen this break in structure with big bold candles getting down, I would have tried to get back in off of this short here, and then it would have taken me out still anyway. But now we're screaming down to where we're calling earlier. So now, do we get back into here? That's the short. You break through here on a wick there. So we get back up to that short breaker. Right there. You want to see that hold here now. Inversion. Inversion. I wish I could. Doing a prop challenge, can't go over 30% in a trading. I was adding stop losses, but mistakenly added it to a take profit. Got out at 2 to 3 pips, 2 to 3 profit. That's all right. Profit's a profit, man. 22nd, 28th, and 30th, sell side. Ooh. DW, it happens. So we just swung through these lows here. So if this is just a run on liquidity and we're pulling back into this range, we'll see if this holds it or not. Inversion gap there, inside this fair value gap here, inside this breaker here. Order block, validated order block. Original consolidation. There's no Michael today, my friend. I got beat up today. I got beat up. I missed some really simple entries there. And you're on Dow? Are you in Dow right now, Lauriston? Or you're in ES? Let me have a look at ES here. Oof, tell me you got an ES up here, buddy. Oh, hang on a second. My wife hit a deer today, so I'm just gonna... Hello? No worries. Are you okay? Everybody's okay? No extra pains popping in after the fact? Okay, good. She did her seatbelt... Hang on a second, double check. Did her seatbelt lock up on her when you guys hit the deer? And check her belly, because if your seatbelts lock up on you, airbags didn't go off? Okay. Because, you know, pregnant girls, you got to worry about their belly, right? Is it okay? Is it drivable? Okay. 12 o'clock. I have to be in it, car start by 12? By 1. Okay. All right, no worries. Okay, bye. Yeah, breaker's not working. Blow right through that. Okay, so we're at the discount. Where are we at here? S&P. Oh, I wasn't looking at that. Wasn't my look. Okay, so look for 50% of your S&P. You said you were short. Tell me you got out on that. Got in at 45.76. 45.76. So you're coming back up for. Oh, did you get out here? Did you take a chunk out at that low? Lauriston, tell me you got out there. You took some off here. At least pay the trader at the bottom of that. That was the only opportunity. Yeah, this could come back to 50% of this range that we just created here now. Now that you've swept these lows. This is not the breaker. This is mitigation here. We did not break that old high. I guess this would be the breaker here. Last down close candle before we run above these old highs here. So if you're coming back into that breaker right here, look for this. That comes right back to 50% inside that guy there. So you're inside that. Back to here. Inside this inversion. No, it's not an inversion. Not yet. It just filled the top of that fair value gap there. Right to the pip. Now we're coming back. Tag the edge of this for a further run up into 50%. So now do we have a there's a return to the edge of it. Now you could see this lift off and come back up here. 50%. Also return to this old high here. Oh, you only sold one contract, so it was either all or nothing. You either have to take it all off there or not. So now this is a valid order block here. So we've come up to the body of it. Now if it peeled off here and come back down. So no, you got to lift off. They're looking for that 50%. You're inside this breaker threshold. When you watch these things, you can see how you'll see it pop on there and then it reacts off there. Now imagine down on the 1 second chart that just reversed it, hit another little PD array down below, and now we're coming back up. So you kind of want to hope, Lauriston, oh Lori, that this is just going to hit the 50%, roll over and come back down again. But 62% puts you right inside this here. Your stops in profit. Okay, good. You got in at 47.76. Mean threshold of the breakers holding. It just seems logical they reach for some premium array. And the next little one is this candle's here is its wick, which lines up also with the 50% top of the breaker. Now you just got to say how much of that is it going to dig into. There you go, there's 50%, and we've just hit the bottom of that wick. Now we're digging into it. So 62%. It's alright if I get stopped out. Yeah. That's what happened to me with my profits, but I didn't stay in profits. I kept hoping it was going to come back down, and I took a $500 hit. So that's okay. I'm not afraid of taking a hit. So now that you're in this premium area, what array is in here that would support this turning here, other than this guy here? And we're into 50% of the wick already. Look at the order block. This looks like it's far more juicy for me. So 62%, 70%, optimum trade entry, 75% is a perfect fill. %. That's all you need really to get a premium array for it to turn around and come back down. We're inside this inversion fair value gap on the opposite side here. Now you want to see this level right there provide a level of support. So we popped up into it above the 50%. We opened on it, traded down, came back up. Are we going to tag the edge of it and get short? Not that we would go short, but we were expecting a return. I'd like to see it get below this before you consider getting a short again. I like the little price imbalance start there. I love it. Right off the 50%, came back up, tagged that. That's nice. So we want to make sure this is not just a new price leg up, though. That will bring us into this breaker here. Back into the order block, mean threshold of the order block. Off this candle here, we have an imbalance. Come back, revisit the imbalance, continue pushing through for or do we just come back? Oh, sorry, we revisited the edge of that mean of that inversion fair value gap again. Now kick off of that and come back down. If you're going to come down, let's go. Right from there, start driving down now. Get this mean threshold. You want to, we're back and revisiting that imbalance I mentioned. Touch the top of it there. We're on it now. In it, get through this, good. Get through that candle. Mean threshold, go, go, go. If not, we're kicking off of here. And we start to come back through, look at that 62%. See how it goes PD array to PD array. If you just keep watching the candles and the arrays, you'll see that reacts off of there. And on the 1 second chart, that's running back to a PD array, higher time frame PD array. That little snapback you saw was it running back in that 1 minute chart. That 1 second chart ripped back up to a premium array. Now it's running down into a lower one. So when you see these little kickoffs here on the 1 minute, we're looking for those same kind of things happening if you were looking at the 1 second chart. So now we're driving through this PD rate. Good. So we've got some support off of that inversion fair value gap here. We want to continue driving through this midpoint here. We've already hit it once. You want to see that, clear that out and run into the rejection block and then back down into here. Did I hear you say 1 second chart? Yeah, I remember that. Okay, so now we're validated this order block candle here. Look at the threshold. Now come back down. You're in that guy here and that guy there. You're between these two candles right now. Imbalance. One more time. Through that candle here, overlapping this candle here. So you're looking for it to extend above these highs, get back into this guy again and start running above that into here. It's trying to make sense. This is where, Lori, this is where you use your tick, 2,000 ticks per candle thing that you use. One second trading. Yeah, I don't go down to a 1 second chart at all. I just kind of look at the way the PD arrays are bouncing around, saying on a 1 second chart that would be bouncing around, and for a PD array to PD array. And you can see that if Lauriston just takes his candles and he attaches a tick value for each candle, like 2,000 ticks or 4,000 ticks, this all suddenly becomes, it all makes sense. And it runs PD array to PD array, PD array to PD array inside that candle, which is the algorithm still extending, still working. So still looking for the 62% on the upside. The fact that we're hovering around here, this 50% line, tells me we should be pushing for higher prices. Usually you get up to 50% and react off of it pretty quick. Now that we're hovering around it, we're outside this breaker here now. It loses its robustness for me. That inversion fair value gap now. As soon as we get on top of that thing, from a we want to be on top of that. See how it's tagging the tops, bottoms, and you get on top of it, find some support, run through, or just big wick through, start getting into this fair value gap here. So we'll see how this thing, this inversion, supports price. Yeah, I never trade on a 1 second chart. I'll tell you that right now. I just imagine what it would look like on a 1 second chart as it bounces around between these PD arrays here. So we have imbalance, imbalance. We've got above this, validated this as an order block. We've come back to the top of it, also inside an imbalance. So you come back to the mean threshold, also an imbalance just above it. We validated this order block. So if you're looking at when I'm looking at this, I'm not looking for any major trades or anything. I just watch PD array to PD array. If you practice watching each array, so this candle now becomes valid. So we're between this guy here and this guy here right now. So what's a logical place? Well, there's the high or the open. The next one is the midpoint. Is there anything in there that supports price? There's a midpoint. See how it bounced off of that? Drive down. Now you got this rejection block here. Because that's the only down close candle. If we lose that guy, then the next down close candle that's valid is this guy. And you got that guy there. Because we just broke below him. We ran these highs. Do we take these highs out now? Or sorry, these lows out here. What's below there? Mean threshold, or rejection block, or fair value gap. So this inversion fair value gap is still holding price. It held here, popped through right to the top, and we're driving back down again. So if you had a stop loss sitting right above that order block there, you would have been sweating, but your inversion fair value gap so far has held. Run these lows. Now if you're looking for quick super snipes, if you get inside this thing and you decided you're trading inside of that, then you're looking at 76, 72. So there's 4 handles right there. So if you're aiming for this guy here, that's 5 handles. Stop loss above your order block. Yeah, you could say, you know, you're valid. You can still be valid for your short. Once this continues to hold price, then you could say short, or you could look for this to still run into that fair value gap up here. If this one doesn't support price now, because if you're looking for premium and discount again before you decide to run higher, if that's outside the range, 50% puts you right back into the fill of this old high here. Pretty close to an old high if you're looking at that range. So I'm looking here. Now I look for see what kind of discount range would you get into before running back up above the high of, or the 50% of that bigger range. So remember Michael was talking about, you have larger ranges, then you have ranges inside ranges. So from there to there is 50%, from 50% down is 25%. Well, there's your 25% area right there. Do we come back and tack off the 25 and then start driving up to the 75% of that range, which would be a fill? See how that range now becomes important if we turn this into quarters? Like if I turn that one into quarters, watch what happens when they go into quarters. 50%, 25% right here, 75% up there of that range. order block, breaker actually, run below this low, inside that, back to 50%, back to the bottom of the inversion, drive through it now, go, go, go. Wick up into the 50% of the range, rejection block, now look for the low here. Still short biased. I'm still short with you all the time that's holding. If we get on top of that, then I'm looking for these that 62% plus to 75% of that range. This is just beat up center threshold. Rejection, usually back to rejection. Let's see if we get rejection blocks. Or it's rejection. Compressing, what are we waiting for? It's 9:50, 10, so we're just coming up for lunch hour. There you go, there's a rejection. Hit her off of that. So rejection to rejection, that's where we hit. And now we can drive through, or we're back up to imbalance. Wow, I called that right to there. But again, that's PD array to PD array, right? So now we're still stuck inside this. So now I'm saying, all right, what else have I got left? What else we got left? We have to extend past here because we've run out of PD arrays on this side. So all we've got left is lows and that guy down here, and then inside this fair value gap here. So do we go back to a premium level? Inversion, fair value gap here. Imbalance. Part of that small little range, if this one holds, and we start to come back up, look for premium discounts. So I'm just trying to take my eyes to premium discount all the time. So there's your premium side of things right there, the imbalance, also the inversion, extension. There you go. I'm curious to see just want to see if I was 50% of that. From that little high there to that high there. Nope, we did not. So that inversion held nice right at 50%. This is where you look, Lauriston, and you go, man, I knew it. Had I just stayed in a little longer. I'm so short looking for the bias. Remember that I was speaking about the order matching algorithm. At this point, price discovery is potentially happening. If it runs either the high or the low from 50%, the current consolidation, that's manipulation after price discovery, then distribution should happen after. Aha. There we go. There we go. Continuation on the downside. So 62% was not in the mark. That rejection or that inversion fair value gap held price perfectly. Look at that, back to 50% of it and then left. Lovely. I shall be right back. Good call, Lauriston. Good call, buddy. You're long bias now off this original consolidation. Yeah, I see what you're saying. You may get one more drive down though. If this is the original consolidation at 50%. %70 retracement brings you back into here. Optimum trade entry. You got to get through this. So we're just entering lunch hour now. Oh, you want to take that out. These have already been swept. Those haven't. That 62% is looking pretty cute now. Return to a low. I want to see this get eaten through here, Lauriston, to continue on the upside. Otherwise, this could be just a return, deep retracement, 79 or 75% to these old lows. Bottom of consolidation, same kind of principle here. Consolidation, return to the bottom of it and leave, or 50% of it and leave, which would be that breaker right there. This looks too easy though. Two relative equal highs. We'll see what happens here. Now, if you get a retracement into here, Lori, for a run up here for 1 o'clock, mitigation. Yeah, this is mitigating off of here. So if we see this mitigate off this order block here and start to come back down, I like to see it get back in here. Stop loss here for a run up above these highs into that 62% range. Right there is on the breaker. Imbalance. Two-minute breaker right there. Body. Suppose you could extend that down to the 2-minute breaker. off that 1 minute breaker. Now you want to see it really rip down if it's going to go. That one didn't hold. Is this one going to hold? You're already through the threshold. Those equal highs look so tasty up there. Well, that's the 1 minute breaker. Going sideways during lunch hour here, Laurie. Staying near the middle of this range here between the morning's high and the pre-lunch low. I want to know just exactly what that was. 27. Jeepers creepers. I want to make a sandwich myself. There's a lot of wicks, a lot of crap going on here. Just might have to wait till the 1 o'clock. Grab a sandwich and come back before the 1 o'clock, the bewitching hour at 1 of the afternoon macro begins. This thing's just bouncing around inside 1 minute hell. It's just like we're growing grass. This just looks like grass here. We're just trimming the grass on both ends. Trimming the bush. Trim, 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 trim. A lot of leaves growing here. These reminders. I'll be back. I'm going to make a sandwich, get another coffee while this bashes around inside here. Time for romantic interlude. Still haven't done anything yet, eh? Can you open your indicator setting? Which one would you like? This one? So I have these different zones marked off. Make sure you have the time zone set to yours, otherwise it'll botch it up. I think the standard is 4. So off grid, you want to make sure you set that for whatever time zone you're looking to get into. Set your lunch hour, because I think they have it set for 1:30 or something like that. Make sure you set that over 12 and 1 and 1 and 4 p.m. And then the midnight candle. Have the midnight open and the 8:30 open if you want the 8:30 as well. Have that. Hopefully that helps. That's what helped me get a little bit more organized. And believe me, I'm not the most organized person going by any stretch. But like I said, Joseph he was an engineer, or is an engineer. And his charts were just so organized. And he blocks it out on, typically you block it out on a 3 or 4 block chart like this, where you put your daily here, hourly, so you can get an idea of what hourly chart you're looking at. And this will be 15 minutes actually, a 15-minute chart, and then your 1-minute chart, which should be 1-minute chart, or 5-minute if you prefer. Now this runs on a 15-minute. You can set it for higher, but I like to look at it on the 15-minute chart. Gives me a kind of a good rundown on what it is I'm looking for. I get a good overview of the last 3 days on a 15-minute chart. Please open your indicator RTX. Oh, thanks. Oh, you're welcome. You are most welcome, sir. Oh. Chat. Derek, you're back. Sales are dropping at the pro shop today. Hope you're having a good day. I'll see good movement in the market. I was able to catch an early trade this morning before working and before the market opened. We'll share it when I get home. Oh, good man. Lauriston, did you go for lunch? I've had lunch and back again. So you've got room for lunch. You still got a few more minutes. I think we're just going to waffle around in here. what are the markets doing other than ooh, Nelly. I have a lot of ETFs. In Canada, ETFs are great little places to stick some money if you want to get a regular dividend. And I'm into some a nice little ETF that is, I caught that October low in ETFs. And I'm looking for a May sell on them. And this one pays almost 12% dividends a year, and it pays monthly, and it's almost up at a 10% growth already. That's HDIF, HDIF. If there's any Canadians out there, HYLD, breaking even on that. DFN, ooh, DFN's up. There's a dividend split fund there. Oh, look for here. If we lose this lorry, that other spot I marked on my 15-minute chart, this guy here, maybe the return to 50% of this before running up there. If we take out that low, look for a 50% plunge, and then of that consolidation, and then a run up for after lunch perhaps. Let me put this guy on instead. We have this breaker right here in London. London session high and breaker. It's an original run down below these lows. So look for the return back to that season or the open, midnight open in New York. If we run those lows out, what else we got going on here? UNG, Jesus, I'm getting hit on that one. HDIF, HDIF, looking good. RS, not so good. HDIV, good. ZWC, Canoe. Cathedral, DXF. It's looking good. DGS, go, 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 yes. Okay, those other ones are doing all right. Still here. All right, heading out for the day. Happy trading. Be safe. Oh, you're done. Okay, buddy. You have a good one. We'll see you tomorrow. It's probably the last decent trading day before Thursday's. Everybody be bailing out. Get your stuff out of there before Thursday. And then non-farm payroll. So enjoy your day, buddy. And I think I'm going to head out as well because my wife hit a deer today, and the car is a bit of a schmozzle. So I'm going to head out, get the car, and try and get it fixed. But with that, I wish you all a safe day off grid if you're still on. And I don't know if anybody else is on, but I wish you guys a safe day. Be kind to each other out there. Thanks for those of you who popped in today. There was we did get over 2 digits today. Woohoo! Thank you so much. We had 11. I think at one time we had 11 on our peak for the day. So thank you so much for popping in, even if it's just to see what we're up to. And I appreciate your kindness, and I'm glad, Hydra, you're doing well and you're recovering well from your surgery. Love each other out there. Love you guys. Be safe, and I will see you again tomorrow. This is ThetaWaveTrader, Darren Hancock, signing out for the day. I'm signing out for the day. Oh, here we go. Now I'm checking out. So anyway, sorry, before I leave, keep your eye on this area right here. And if we do run into that consolidation again, look for that 50% range. Does it hold price for us to run back up here and clean this lot out after lunch? I think this may be the target, an entry here off of this order block. If we do go down into the 50%, look for this one and then the run back up after lunch. That's my goal. And that 62% of that range that we're looking at here, which is no longer the range because we've extended it down into here, but you're looking up into that little pocket of cash up there. So that's kind of like what I'm looking at for the lunch hour, 1 o'clock macro. Anyway, we'll see you guys again, and see you later off grid. See you guys tomorrow.